Let's go on to my next topic, which I've entitled A Mortgage MOT. And we've talked about this a few times before, a mortgage MOT. So I'm going to head back over to the whiteboard for this one because I want to give you a few ideas on this one as well. So let's just give ourselves a bit of space here, shall we, on our whiteboard. Hope everybody's well. Hope you're all doing okay, enjoying the autumn. Holidays all over now, aren't they? So we're back into some hard work for the autumn season as well, particularly in the mortgage market. There's quite a lot going on now. Interest rates, of course, going up. You're probably dealing with lenders with all sorts of issues around their rate caps and all sorts of things. So let's see if this might help you to produce some more business. I call this the mortgage MOT. Now, I've used the phrase before. Mortgage is what you talk about. MOT, people can all relate to because that's, have a car, you have an MOT. But you need to give it a subtitle. It's your chance to upgrade, this is the big word here, and look at some refinancing. So they're kind of like the inquiries that might help you to think about, taking this meeting on. So what happens here? What's this all about? Well, what I'm saying to you now is that you need to get your CRM system. Now, your CRM is your customer relationship management system that has all of your clients on there that you've dealt with over the last few years. And you'd be contacting those people and offering them an MOT. You need to book their annual MOT, your chance to upgrade and look at some possible refinancing. That's the psychological sales, if you like. It's a powerful word, upgrade. Refinancing is powerful. It's FOMO, fear of missing out. So that's the lovely one I like to use, the fear of missing out. So that's how you sell it. So book it up and get them in for a meeting. Do it online, do it on video. It all makes sense, doesn't it, to do so? Now, once you've got them sitting down with you, what you want to do is talk about refinancing and then upgrading. So what refinancing options have you got? Well, just to put it up there for you, refinance. And that, by the way, is the word we use now. It's quite modern. It means an awful lot of things. So first of all, if they've got a fixed rate, you might want to look at giving them a new fixed rate mortgage. Or, of course, you might want to remortgage. These are going up naturally, so you might want to be able to sell that to people, get them a good fixed rate as well. At the same time, you might want to look at paying off any government loans. Any Help to Buy in England and Wales, Scotland, of course, have their own government loans. These are the equity loans that the government have given people to help them. You might want to think about paying those off because they've got to start to be paid soon as well. If their loan to value, of course, has improved, so a bit of a smiley face there, the price of their house has gone up, their mortgage has stayed the same, so their loan to value has got more competitive. You might be able to remortgage to another lender and get a far better deal all round. Better rates, better deal. Because they, as you know, they give people much better deals the more efficient the loan to value is. So get them to value their property, head on to Zoopla or whatever they need to do, get an up-to-date valuation. People have always got an opinion, haven't they? And while you're at it, have a look at any unsecured credit that they've got as well. Do they want to consolidate any unsecured debts that they might have? Credit cards, store cards, whatever it is. Obviously subject to affordability. You might want to look at throwing that into the mortgage debt itself. Monthly payments much lower. There's obviously issues around that, of course there are. You've got to give the best advice, of course you do. But these are just opportunities to refinance. So these are things you talk about. Now on the other side are upgrades. And I like upgrades. I just love the phrase, isn't it? An upgrade, here we go. Now upgrades are what people used to do with their phones when the contract came to an end, didn't it? Upgrading. So what you can do here is a few things. First of all, have a look at things like lasting power of attorneys and wills. Do those need to be upgraded or even done for the first place? And you should have somebody you refer to for that because it's good business as well as the right thing to do. Is their protection still relevant? So did you sell them protection? Have they still got some protection? Is it still relevant? Do they need some more? Does the income protection plan need changing because their salary's changed? Do they need to look at the amount of protection? Maybe they've got some more kids or something coming along. So you need to upgrade their protection. Maybe take a look at something like relevant life assurance. If they've got their own limited company, If they're an owner director, they can obviously get it through their limited company and get some tax benefits on the premium. That's something to look forward to. Maybe some sort of group plan as well. And while you're at it, take a look at their home insurance. Make sure their home insurance is fit for purpose. There you go. It covers the right amount of money. Let's move across here so you can see that. It has contents. If they haven't got any, make sure they get some as well. So all these things can be upgraded. That's all rather lovely as well. While you're at it, have a think about your commission. A lot of people, advisors, are getting a bit worried about possibility of people cancelling their direct debits for their protection policies. Now you can go for what we call non-indemnity commission. This means that you get paid commission in smaller bits over a period of time, rather than the big one-off lump sum that can be clawed back if they don't keep their premiums going for a couple of years. Non-indemnity commission, if you have enough of it, is a jolly good income stream for your business. So take a look at that, maybe upgrade how you actually receive your commission. And while you're at it, maybe upgrade your fee structure, because customers, of course, have to pay fees for this sort of thing. It's not a free world. Obviously, the MOT might give you a remortgage in which you might earn a proc fee from it, maybe some more commission on some insurances. But you know, you are a business person, you are whole of market. The reason you sell or you have fees is so you can be whole of market, because there's quite a few lenders that don't give proc fees and you can use them, whereas brokers that don't charge fees won't use those lenders because they need the proc fee. That's how they feed themselves. So you can justify your fee based upon that. You know, you are whole of market, and that's the benefit of using you. There's nothing wrong with charging a retainer. Lawyers do this all the time, where you charge a fee to have your services each year. So be it monthly, annually, whatever you want to do, have a fee which allows the customer to use you every year, every 6 months for an MOT and a refinance, look at situations. It's nice, people like it. They know, therefore, they've got your time whenever they need it, and that's important as well. So that, my friend, is an MOT and an upgrade. I hope that's been useful for that one.